Oh, hi,
Hello,
Tiffany. Hi,
everyone.
Chelsea. Hi, Zina. I see so many familiar faces. Great. Hi, everyone.
Hello. How are you doing? Just put something in the chat, like where you joining us from. Uh,
Yes. So I will give a quick intro. And as I will speak, please put in the chat. And I know that you already know what to put in the chat. Your name, where are you joining from, and your profession. And welcome to our live session. And this is the first live session in June, right? And I
yeah,
hope you all guys busy with the season. So you can also put some comment of how your season is going and what's happening on your end. And yeah, so as I promised, I will give you a quick introduction. And guys, if you want to keep your cameras on, that's totally fine. We love to see you. We love to see your reactions. So yeah, you're more than welcome. Just keep yourself muted or silent. So, again, that at Vet Vibes, our mission is to help wedding professionals to grow business and convert your talent into profit. And we had an amazing live session so far. We talked about your PR, we talked about sellable portfolio and how to grow and develop the personal brand and how to unlock your Instagram. So we actually covered pretty much everything about marketing and PR. And today we want to discuss the back end of your business and the finance and operations. And I know that for many of you, finance sounds even more intimidating than marketing. Because all right, like marketing sounds at least a little bit classy and fancy, but finance, it's oh my God, I'm totally out. I'm a wedding photographer. I'm an artist. Like finance is so far like California from New York. So, but again, your success is somewhat multi-factors, right? And finance and how you operate your business and what kind of CRM system you work and so on and so forth actually contributes overall profitability. And we have an amazing speaker today who will make this complex and sophisticated world of finance very easy and explain everything in a very simple way.
let
Yeah.
me mute
Yes, and now I will pass over to Daria to give an introduction to our speaker, Alex, and then we can start.
Yes. Once again, hello, everyone. Hello, Alex. Yeah, so let me quickly introduce you and the floor is yours after that. So Alex Nikityuk is the founder and CEO of Maru. I'm sure many of you know this company. It's a company that actually groundbreaking startup that transforming how payment are processed in the wedding and event industry. And he's our financial guru, our super expert. And he has a 10 years experience in the corporate world, and he worked with companies like Procter & Gamble, Bank Revolut, General Electric. And he also has the great experience in building a successful startup that now is conquering US market. And fun fact about him that I actually just found out about it yesterday, that you relocated 17 times during your life, right? So you have an extensive life experience, not only like the corporate and the startup experience, but also life experience. You used to live in the United States and China, and now you are in United Kingdom.
London.
In London. So you're joining us from London.
Yeah, that's exactly where I am.
We're happy to have you here today. Thank you for finding time. And yes, we are eager to learn from you.
Amazing. Thanks, Daria. Thanks, Halina. Hi, everyone. It's a pleasure to meet everyone. Yeah, as Daria mentioned, that today we're going to speak about finance, specifically about business profitability. I will start with a quick intro on myself. Let me switch. By the way, let me know if you can see my slides.
Yes.
Yeah?
Yes.
All right. Awesome. Yeah, so as mentioned, over 10 years in corporate career, I specialized in corporate finance mainly. So these fields include well, obviously accounting, financial planning, cost management. I worked on multiple projects around financial audit, different business divestitures, acquisitions, integrations, and things like that. It was a pretty cool experience, because I worked in the companies like Procter & Gamble, General Electric, and well, those are two main corporates. And then Revolut, which is a neobank. So it's a payments, it's a fintech world and completely different environment. And that also gave me, some courage and, knowledge how to start my own company as well, which I did in 2020 by launching Maru. Yeah, on the personal side, yeah, like we lived quite in a few places. My son was in 9 daycares in the US because we were just moving between, different cities. I married myself for 14 years and have 2 beautiful children who are studying here in London. Typically, you can find me between London and New York because my team and our clients are mainly obviously based in the US. My team is in Europe, so I'm kind of going back and forth. Yeah, and the goal for today is just to make sure that I can share some of the knowledge around financial management, because over the last 3.5 years since I've been working in the wedding and event space, I saw that there are some things that I can share from my experience in financial world, and I want to make sure that it's an open dialogue. So if you guys have any questions, please shoot them in the chat. We're definitely going to cover that. From the agenda perspective, we're going to spend around 30 minutes, hopefully, for me to cover some of the points I wanted to share, and then we'll have just a proper Q&A session. If you have any questions, like we can cover those as well. And I want to also share a bit, like there is no right or wrong question, right? So if you think like, oh, my question might be like super simple, please shoot it like regardless, because I wasn't in your place at some point myself, and some of those knowledges might seem like super basic, but in reality it's just important to make sure that the foundation is right, because well, the one of the finance basic, it's kind of like as a lifeblood of every business. So if you set it right, you will be successful. And one of my favorite quotes that I like to remember all the time is, no matter how wealthy you are, happiness is created by positive cash flow. So it's I know it's a finance talk, guys, but it's a really nice one if you think about it. Cool. And to kick off, I just wanted to start with a few simple questions about some terminology. You can shoot your answers in the chat, like 1, 2, 3, 4. Which financial statement is the most important for understanding of your business profitability? Profit and loss, balance sheet, cash flow, or all of the above?
I love that the people are also sharing their favorite quotes.
Yeah, that's a good one.
That's actually
Consistency
applicable.
catches reality.
I think
Yeah.
Petra, and he also like a tech guru. All right, all above.
Yeah, all above.
When you
Fair
have
enough.
option all above, it's a like safe choice. I know, always choose the all above.
Fair enough.
Everything sounds smart. Choose all
Whenever
above.
in doubt, yeah.
Yeah. All
choose
right.
anything.
So Alex, tell us
Okay.
if it's all above or there is something different.
Well, everyone is very close, and like I would agree that understanding or having like all 3 financial statements will give you a really good grasp on like how your business is performing. But if you're solely thinking about your profitability, profit and loss might be the one that will be sufficient in terms of understanding what's the net result of your operations. And we're going to talk about this as we go through.
I wonder how many people understand the difference between 1, 2, and 3. Sorry. Okay, I think they will get there.
No, we'll get there. Yeah. So question number 2, which of the following is an example of variable costs? Studio rent, full-time staff salaries, travel expenses to an event, software subscriptions. And apologies if the question is like more heavily focused on the photographers, but just in case.
It's a thinker. Just give us your best guess.
Yeah.
Give us
okay, so 3, 4.
Okay, some answers. 3, 4, 3. Okay.
So travel expenses or software subscriptions. Travel.
Yep.
Yeah.
Great. All great points. So variable costs are basically the expenses that you incur that are linked to the output of your work. So whatever you sell. So if, for example, you did 5 events, you need to include into variable expenses all the costs that you incurred in order to produce those events. So in this example, studio rent, full-time staff salaries, and software subscriptions, you can't directly link them to the event that you produced. While travel expenses, this is something you can exactly outline, include as a line item on your invoice to the client and say, hey, I'm charging you, for example, $10,000, out of which 150 is my, travel cost to get to your location. Let's go to the next one. Why is gross profit important for your business? Number one, it shows total revenue generated. Number two, it indicates how well you control your direct costs. Number three, it represents your net income. Number four, it is used to calculate your taxes.
Alina is the first one.
Okay.
And everyone follows your lead.
All right.
I don't know. No. Everyone is just making decision on their own. I'm a marketing
Yeah.
with some kind of like a huge corporate background where marketing is all about money.
Nice. Okay, so looks like a lot of people think it's number one. Well, to be honest, the total revenue generated is actually indicated by the total revenue line, while the gross profit, it's ultimately the difference between your revenue minus your direct costs, direct/variable. So it's ultimately it's number two. This line shows you exactly how do you control your expenses linked to to your events or to the projects that you're working on. And we're going to look in a few slides. We're going to look into like real P&L, so profit and loss statement of photography business, just so you can see like how to look at those things and like what to include into your direct costs and whatnot. And I think it's almost there. So which financial ratio helps measure a company's profitability? This is hardcore, guys. So shoot your best guess. Current ratio, return on investment, debt to equity ratio, accounts receivable, turnover. All right, return on investments, Pedro, Charlene, okay. Yeah, you guys are right on point. So ROI, or most probably you heard this term, ROI. That's something that indicates, how you can measure your business profitability as a ratio, so as a percentage. What you do is you take your net income and you divide it by the revenue, and that gives you some sort of understanding like, okay, that's how much was left after I received all the, I got all the income, I spent all the costs that I incurred, and then what's left. So that's how you calculate the return on investment. All right, so last one, guys. What does the break-even point indicate? Number one, when total revenue equals total costs, when total expenses exceed total revenue, the point where you start making a profit, the max profit achievable. Okay, number one, three. Okay.
Three. The three is a top answer. Yeah.
Yep. So three. Okay. So the break-even point, it's kind of like 1 and 3. So ultimately, that's when your total revenue equals your total costs. So like that's exactly like that point. So everything after break-even point, that's when you start making profit. But to be honest, it's very, like 1/3. It's somewhere in the middle. All right, awesome. So I think a lot of people are very familiar with some of the financial terms or ratios that we will be talking or like being used. I wanted to kick off our conversation just to share why I'm passionate about finance and why it's ultimately the cornerstone of success. The first question I'm asking myself when I look into like new topics or something that I'm not familiar is like, why do I even need to spend time on this? Like, why it's important? So there are two main reasons why I think these things are critical for a business. Number one, if you're here for the long run, and you want to ensure that you run your business sustainably and you're growing it, you need to understand your numbers. You need to understand your financials, because you can maintain break-even point-ish hobby or business for some time, but if you're not tracking your numbers, at some point, life gets in the way and things might go south. So you need to stay on top and to ensure that continuity of your operations. And number two, ultimately, is just to make informed decisions. Again, I'm a numbers and Excel nerd or data nerd, and I love to kind of dig in and understand like why things change, like what drove some differences in my plan and my actuals. So having this knowledge will help you to make sure that the next time you speak with your partner about should we hire like extra freelancer or contractor, or should we buy this venue, or should we invest in this new photo equipment, like you can clearly understand how it will translate into the future revenue. Will you be able to recoup the costs? Will it turn your business into or give you more profitability? As a result, so what are you going to get as a outcome of this analysis or in understanding your financials? you will definitely get an improved cash flow. Once you understand the numbers, you will be clear. You will clearly see that, this is how much I'm making. This is how much I'm spending. If the numbers don't work out, it's like if you're spending more, like you first of all, based on this knowledge, you will be able to act. You'll be able to address those areas when the expenses are greater than your income, and that will help you to turn your cash flow into positive numbers. And then as a ultimate consequence of that, your profitability will increase. One thing I noticed, again, looking into a lot of wedding and events businesses, we guys, we run ultimately projects, right? So a lot of people using CRMs or other software, in many cases we see only the revenue side of things. So how much client paid us. The only time we can see the outgoing payments or the expenses that we incurred is in tools like QuickBooks or something like that, but they're not linked to the specific events. In finance, we have a term called project accounting. That's basically where a bunch of cost analysts are sitting and they're looking every cost line and then indicated, this expense to this project or to that project and so on. And the same goes like to, revenue analysts. They do the same for the income streams that they receive. Why? Is in the end to be able to see that, okay, I did a project for Sarah and Michael's wedding and I received, I don't know, $100,000 revenue. And then my costs were, for example, like 37,000. So my profitability was 65,000. Understanding this not on the greater business level, but on the project level is critical. Because then you can see that, okay, this event gave me 65% gross profit. That event gave me like 37. What happened? And you can start asking the right questions and like continue going in the right direction. Some of the challenges that are not, I would say, very common for other industries, but obviously I see them appearing again and again in our space is seasonality and the revenue inconsistency. Apologies for the typo here. Events are happening not every day. There are seasons. There the weather gets in the way. Depending on your geography in the US or globally, it has its impact. So first of all, like if you're if you're in the business for some years, you have some historical data that will help you. If you're getting into the industry just now, that's something you will have to learn. And this is where I definitely recommend you to network and reach out to your fellow professionals in the area or around, just to ask how the season looks like. And again, we're going to talk about this in a few slides. And then the second challenge here is, again, because of this inconsistency on the top line, so revenue, you will have fluctuating variable costs. So how, because for example, right now I know that there is a very strong trend that couple book their events with a very short lead time. So imagine like you're getting, I don't know, like 5 or 10 leads with a lead time of, I don't know, like 5 months. So you need to make sure that you have enough capacity on your hands. Like you need to hire contractors, you need to create a team quickly in order to support this. And like getting this instantly sometimes might not be that easy, depending on your geography. So that those variable costs that go up and down, that creates extra complexity. Let me pause here just in case you have any questions or something worth to kind of double down or talk one more time. Feel free to, again, to send them in the chat.
I think everyone's
just said that you hear, just send a plus or yeah, just send, just text that you hear and you're listening.
Put
All right.
plus if you follow. It's not easy. I'm with you.
It's easy to
I'm with you. Yeah, I'm also like listening carefully, but I think that we can
tracking.
break
Okay,
down
cool.
all the statements.
Listening.
Good.
Okay, amazing.
Yeah, and guys, like if again I say something that's not very clear, just send a question or like say stop. Like I'll definitely go back, and I will make sure like we break it down to the most simplest concepts possible. So one thing I wanted to start, because this is like where a lot of financial folks spend most of their time. It's the P&L statement, so profit and loss statement. Typically, P&L statement analysis is broken down into 3 things, so 3 parts. One is what's called like top line analysis. Second part will be, your costs or cost centers or cost analysis, expense analysis. And the third, it's like things like they're very heavy accounting stuff like depreciation, amortization, different, income, other income or expenses received from dividends paid or interest received from your bank, from your bank deposits, things like that. We're gonna, skip the third one, but I will focus a lot on the first two. So let's kind of, look into what we have here. So the top line or revenue or sales line, this is the most kind of important thing that's, where every business should start. I recently had a conversation about the pricing topic. Like, I want to make sure we are on the same page that you should always think about, like, as a business, of making, money, because it is very easy to go into the trap of like making favors to your clients or thinking, oh, you're not worth like that much because you're just starting in the profession, so I'm going to charge less. Like that is a very slippery role. Make sure that you think about your sales and your pricing from day one, and look into your market analysis or like other companies in the space or other service providers, but make sure you set the prices in the way that the revenue is your very strong and solid starting point, because everything that will go down as we could continue here will only decrease it. So if the revenue is not enough, it makes no sense to think about cost reduction and things like that. You're just not charging enough, and like we need to make sure that you charge up based on your value. Well, there are two approaches which we're going to talk as well, but I know that it's a big topic in the event space that you need to charge based on your value. All right, so in the revenue, what can you include? Ultimately, every income that you receive. So one kind of caveat that I want to make is, like, whatever I say today, please don't take it as like tax advice or legal advice, because well, I'm not based in the US. I may not know like all the laws in this space or globally, obviously. So I will try just to speak as a common sense. And then if you have any specific questions, we either can chat separately or please ask your CPA or accountant professional whom you work with. So in terms of revenue, well, ultimately you put there every income that you receive from the invoices that you send to your clients. If, for example, I know that it's a big thing right now for event professionals, that wedding season might be slightly on the low end than before. So a lot of businesses are taking side gigs or some other approaches or other projects. Make sure that you at least somehow separate type of the activity that you run. So for example, if you're running photo shoots because you're a photographer, that's one line in your revenue. If you're doing, I don't know, like if you're printing t-shirts and you're doing this under the same legal entity and you're having a consolidated accounting statements, just do it in a separate line. Why? Is because, again, if you put together both revenue streams and all other expenses together, like that will not give you a real picture how you're performing for like specific type of activities. Because like if you're a photographer, you would like to most probably understand that how I'm doing on the corporate events, what's my marginality there, how I'm doing on the weddings, maybe how my prints are performing, and things like that. In many cases, this type of stuff is being done by your accountant professionals. But you can do that as well, because you just need to create 3 separate lines on your revenue level. The question was about how to count and include depreciation. We're going to talk about this in the third part. So I want to make sure I address this question later. Cool. So on the revenue side, we're clear. In this example, I just made up $15,000. That's the revenue that this business received. Now, cost of sales. So this is where you, or maybe most probably you heard the topic, like, or the term cost of goods sold. So COGS, cost of sales, cost of services, it's all the same. It's ultimately the summary of all your direct expenses. What are direct expenses? They sometimes being substituted by the word variable expenses. So something that you can directly attribute towards the final output of your business. If we're talking about, you're printing t-shirts, again, sorry for this example, just I want to take some completely different example from our industry, just so you can see, the point. So if you're printing t-shirts, like every, t-shirt that you sold for $10, what's the cost of this t-shirt? Like, for example, $3. So that's a direct cost. Printing expenses on this t-shirt, like 50 cents and so on. If you take, for example, photographer in this case, for that event, or for the multiple events, like for example, if it's a monthly statement, you use the help of some assistant photographers whom you paid $1,000. You use some event-specific equipment rental. Make sure there will be a difference if there is equipment that you rented, for example, for a month, right? So for instance, if you're renting like equipment for a month for like across all events, I would suggest attribute portions of this cost that you incurred for each of the event that you had. So in this case, let's just imagine. So if it's a not event-specific equipment rental, it's just general. So you paid $500 a month and you did 5 events during this month. I would split it and put $100 into each event, just to make sure that you really, you can kind of like separate that, this cost belong to event A and this cost belong to event B.
But
Then
jump in with a question, because sometimes you don't really know how your, let's say, year will end up with how many events, and it means like you can do it retrospective. Like you sit down in the end of the year and you basically can split some kind of big cost into the number of events, right? But if I do it as I go, how I can do these assumptions? Like if I need to do the P&L for the project once it's done, right? What is a good way? Does my question make sense? Because like I normally question it myself.
Yeah. So I think I think that there are two levels in this question. So number one, if I would be a business owner, like number one question I would think, does this cost belong into my cost of sales, so direct costs, or operating expenses? The main difference is this cost, can this cost be attributed to the final output of my business, or it's actually something like I would incur anyway, right? So that's number one. If you say, okay, this is attributable to the events, so to the events that I'm producing, so that's a good decision point. The next one is, how do I split it? Because as I go through the year, I don't know how many events I had. That's fair. But that's why, in many geographies, or, especially tax jurisdictions, the reporting is being made not only on the annual basis, but on the quarterly as well. So that helps to kind of keep things tidy, like as you go through the year. And then, yes, then there is like big cleanup with your, accountant professional at the year end, just to kind of put things into order. But it's definitely better to do it like on a regular basis than the one time in the end, because it'll be really hard to do.
Okay.
Then there are some other examples here of event specific or direct costs, like travel expenses, some consumables. For example, if you're bringing SD cards as a photographer for the event that you use for just storing all those photos that you're creating, post-processing costs, printing and production, obviously, and so on. So as a result, let me ask you differently. Let me ask the audience a question. If you're not a photographer, like if you ever had a question about like, does this cost belong to my cost of sales or OPEX, operating expenses? Can you shoot this in the chat, just so we kind of see like, what type of other expenses that people incurred or where they had some hesitations? I think it'll be really helpful just to see, if you're faced with those questions on your side.
Okay, so non-photographers, I've seen like several planners here, makeup artists, cake bakers. So guys, your opinion is needed. Yeah. Can you say the question again, Chelsea?
Yeah. So I'm just curious, like a lot of examples I was doing here on the slides, they are mainly for photographers, just, because it's easy for me to relate to. I was curious if in your business you ever had a moment when you thought, okay, this expense, does it belong into my cost of sale, or actually I can put it into, operating expenses? Because for instance, I spoke, in Chelsea, like if you can share, like, what are the examples, that'll be great, just so we can give some other, examples to people on
I maybe can start from what we've heard with chatting with different professionals. For example, you do the rebranding of your brand, right? And you invest into the website, into logo, into even your merch, like the caps, like the t-shirts, etc., so on and so forth. So how can I treat it? It's my operational expenses, or wait?
Yeah, it's a great question. So I would put this into operating expenses as a marketing, basically. I don't want to go into like too much complexity, but some accounting professionals, they might suggest you can actually amortize this cost over time. So because you're investing in your brand, this brand will play out for multiple months and years. Why would you accept the full cost of this investment in 1 month, while the revenue you're going to receive will kind of play back over months? That's a concept, and most probably that will be the final one. But if you're if you're a small medium business, if you're running your accounting purely on the cash flow basis, on a cash basis, my recommendation won't be not to do that, because ultimately it might create some complexity around understanding what's your actual cash flow. So to explain myself, what I mean is you would, by amortizing the marketing expense, Alina, as you just described, let's say $12,000. If you would say, okay, I'm gonna receive the revenue from this expense over 12 months. So instead of taking the entire 12,000 cost within this month, I'm gonna accept only 1,000. What that means, that just again, based on my experience, a lot of small media businesses, they don't look into cash flow and statement, they don't look into balance sheet, they mainly look into the net income as their indication of how much I made. What it means is you will see that, oh, you actually spent $1,000 this month, while in reality you spent 12. So you might actually think you are so good from the cash position, while in reality you're 11K shorter. This is why my suggestion will be, try not to use what's called accrual basis type of accounting, but rather cash basis. And being very transparent, with Maru as a startup, I'm running a cash basis accounting because I need to know my company's runway. We're not a massive corporation. We're the same small business.
Accrual is the luxury of huge brothers.
Exactly. That's when you can play with those accounting, different ideas and concepts. You can present your numbers better than to investors and things like that. It might be very easy to kind of mislead yourself. Okay, gifting for clients. That's a good one. I think if it's connected to the event that you produced, definitely in direct costs. If it's a gifting for the clients, for example, you work with them and you just want to kind of congratulate them with an anniversary year after, that this type of costs will be in your operating expenses because you're not generating revenue anymore to that. Okay, the question from Chelsea: do you suggest people take their yearly operating costs and divide it amongst the revenue from your project? That way it still includes as part of their COGS. Do you mind talking about cash flow once more, a little slower? Explain why cost of sales should be separate from us. Okay, fair, all good questions. So let's chat one more time about the cost of sales and OpEx. So cost of sales, it includes only expenses that you can point to, for example, $1 that will be sitting in the revenue side. So you did a photo shoot for the wedding of Sarah and Michael, and you got, for example, $10,000 revenue. So all the expenses that you incurred specifically and only target or linked to that revenue, to that event, they should be sitting in the cost of sale. So following on an example from Chelsea, right? So if you came to the event, you traveled, you if you're for example florist, you bought flowers, all those expenses will be in your direct costs. But year after, you like the couple, you loved working with them, you send them a gift, also flowers, this will be in your operating expenses, because this is no more tailored and linked to the revenue that you received, or actually there is no revenue that you received in the same month. So and operating expenses, it's ultimately, we're going to speak about this on the next slide, but these are what's called fixed costs or indirect costs. These are the costs you would incur even if you have 0 events happening, which is not a good situation to be. But ultimately, if you need to keep your lights on, these are the sort of expenses that you include there. And in terms of cash flow, just to make sure I speak about the right part. So if you run your accounting or if you look on your numbers, simply from the position, okay, let me check my bank. This is how much I got, let's say 15,000. Now, let me check what in the bank statement, what I received as in my expenses. So this is what's called cash-based accounting. So you're not like, playing with allocating part of the expenses into different periods, like spreading them over time. You just literally look, when we all worked in corporate, like this is my salary. These are, I pay for rent. This I paid for, kindergarten, like food, and things like that. Like very kind of student-based approach, like when we just started our life and making money, right? This is, I personally like this approach because it's honest. Like you're not trying to trick yourself with like, oh, I'm gonna take part of that and like say it's for the revenue I'm gonna get in December. Like you just have very clear knowledge of your profit, solely looking into your net income. What about an album that you delivered to a client 3 months ago? Is that OpEx? Oh, well, not really, actually, because most probably I would assume, and please correct me if I'm wrong, you charge that clients for the revenue, like for that album, right? It was part of the original invoice. So there are two approaches what you can do in this case. If let's just say your invoice was $10,000, so 7 was the photo shoot itself, and 3 was the album. So you can, you can recognize either 7 in this period and all the expenses associated with the event solely, and then recognize 3 months later, and then the cost for that album 3 months later. So this way you kind of align your revenue and your expenses when they occurred, because that's one of the fundamental rules of accounting, is like you need to make sure that those things are aligned. That's why all this accrual thing comes up. Alternative option, so approach number 1 will be recognizing the full revenue in month 1 when the client paid, and recognizing the full expenses for this album in month 1 as well. So that means like you honestly kind of look into whatever you had incurred, like in terms of revenue costs for this client when it happened. We spoke on the previous slides about gross profit. So the difference between your revenue, as in this case, and all the cost of sales or direct costs that you incurred, that's what's called gross profit. And as we saw on the questions before, it ultimately shows how well do you manage your direct costs. So rule of thumb, your gross profit should be positive, because sometimes in startup world we call it unit economics, because if you're basically setting 1 unit of your product for $100 and you're spending $102 on making it, just this product, like that's not a business. You're going to be out of business. And GM percentage, apologies for that, it's sometimes gross profit, also called gross margin. So I just sometimes use a GM, but it's the same thing. So GP, GM percentage, and this ratio, why it's important, that ultimately gives you how much cash is left from the $100 that you made in the percentage basis. Why this is important? Well, so that's when kind of the whole idea of the project accounting comes in, because on the gross profit level or gross margin level, you're able to compare yourself against yourself. So you can, like, if you allocate expenses and revenue of each project to that project, you will be able to look into, let's say you run 25 events throughout the year, and you can see how your gross profit fluctuates between, I don't know, 37% to like 80 to 55 and so on. One, it gives you information about, okay, what is my average? So you can kind of like estimate this. Secondly, you can always and immediately identify what if, like, as you're working on this event, what if your gross profit went below the average? Okay, that's immediate red flag, like something needs to be looked into. Sometimes it might be as simple as your accountant made a mistake in allocating the expenses to this project, right? Sometimes it happens. In other situations, something really went wrong. For example, I don't know, if you're a florist, like the prices went so up that the revenue that you quoted your clients when you signed the contract, now for worst case, now it's lower than the cost of those flowers. So something has to be done if it's possible. Like maybe there is opportunity to talk with a client and see like, hey, you know, something happened with those flowers and like we need to, you know, revisit the agreement, or I don't know, like things happen. But it also gives you, yeah, well, yes,
Yeah,
absolutely. 2020 was very difficult, and you know, totally understand. And you know, funny, not funny, like sorry for the word. I started Maru in 2020, so that was like a pretty interesting period to even get into the events industry and wedding specifically, because yeah, it wasn't fun time. So well, yeah, I mean, the benefit I had was like I had a chance to speak with a lot of businesses and really understand like, you know, what they're going through, what are the issues they experience, and you know, how we ultimately can help as a company. All right, so we spoke about the top line, the first part of the, you know, profit and loss statement, or P&L as they call it. The second part is, you know, the cost management, so operating expenses. As I mentioned before, these are the costs that, you know, no matter what happens on your top line, these are the costs that you will incur just to survive as a business. It might include, well, salaries like for full-time employees, not contractors. It includes studio rent if, for example, you're renting every month. It includes insurances, subscriptions, utilities, you know, marketing expenses, professional services. There is a pretty big variety of things that can be also added here. But I just wanted kind of to give a few examples so you guys get a, you know, a directional understanding like what is going in there. And the difference between your gross profit, so in this case 8150, minus the summary of all your operating expenses, gives you, most probably you heard the term, earnings before interest, depreciation, and amortization, or EBITDA. A lot of finance folks, they talk about EBITDA and things like that, but in the end of the day, that's how profitable your business is before you know, all the interest payments that you need to make, all the, again, deposit interest that you will receive before taxes, and before all the accounting, you know, adjustments like depreciation, amortization. It's literally what it is. Like it's earning before interest and depreciation and amortization. So that's why it's called like that. But why this is important, it kind of gives you the understanding is of like, okay, I'm making $100 you know, on my product, and in the end of the day, before all the taxes, I'm left with like 18% of, or $18 from those 100. So again, if you compare, you can compare yourself monthly, you can compare yourself quarterly, or against yourself, or on any time frame that you need, depending on the season. But this number gives you a very quick understanding like how things are going. Because if you know that your average was, I don't know, 20% EBITDA, and then at one point you're looking at yourself and you, like year to date, for example, we're sitting in 4th of June, like you're going to look into 5 months of your accounting reports in QuickBooks, and you see that your EBITDA is like at 3%, that's something to be worried about because it's way below your normal 20. And I know it's a common sense, but like that's immediate signal to look into two places. One, something on the revenue side, something is wrong there because it looks like the revenue is just so low, or you start incurring a lot of expenses that you didn't anticipate it, or they're somehow different from your historical averages, because there is no other reason why your EBITDA will go from 20 to 3%, just like in a span of 5 months.
Yeah. So it's like,
and
to
also
summarize, either you earn less or you spend more, basically.
Yeah.
Yeah, and again, like
You make
I know
less
this
money or you generate more costs.
Yeah, but I want to make sure, like, I know it sounds very simple, and it really is, but these are some of the like very quick you know, questions that you can ask yourself, and like just to understand where I need to look at.
Wait a second, I'm just trying to.
Hochzeitsdienstleister ist.
Okay, I'm just.
Janina, I'm trying to
I
mute you.
will mute.
No, mute. Yeah, I muted you. Okay.
Yeah.
All right. And one more thing, I wanted to make sure that, you know, we're not just like, you know, talking today and like I'm showing those things. After the call, you know, Alina and Daria, they will be able to share the actual file. So I just build the financial model for, you know, for you guys, so you can access it. You can upload your historical data there. from your accounting systems. You can, add, any, forecasts and plans just to kind of try and see like how it can be used. So hopefully that will be something, useful. All right. So on the third part, which I said, as I mentioned, like it's quite small, and I would prefer not to spend like too much time. Like all those accounting stuff, all this accounting stuff, like again, depreciation, adjustments, amortization of your software expenses, or something else like interest income, payments on your or interest when you took the loans and you're paying for that. So all that is sitting here. There is like the end result here might be positive or negative, depending, what if you received more interest than you paid. Usually not, but like that sometimes happens. And then you get to net income. So that's the end. That's the end of your profit and loss statement. The rule of thumb, obviously, you need to make sure net income is positive, or worst case, break even. Like if it's 0, it's still okay-ish. Why it's okay-ish? Because, well, it's 0, kind of like it's not helpful. Like you won't be able to reinvest those funds into your business to grow it, but you were able to cover your, all the, costs incurred for all the events. You were able to cover all your, salaries, fixed costs like, office rents, all your subscriptions and things like that. You're able to cover your taxes and, some other, income and expenses that are not operating, and you got to 0. It's not bad. Like again, you just, that's what's called kind of break-even point. Like you're just not growing. But if the number is positive, that's good. Like these are the funds that now you can take and you can put into, your marketing expenses next month, or, marketing investments in this case. Again, for any kind of summarizing line, like gross profit, EBITDA, or net income, they always calculate ratios. The ratio, again, is net income divided by revenue. So that's kind of the rule of thumb. You always divide by revenue. So based on the $100 that you made, how much is left in the end of the day? So in this case, $14. Yeah, so that's kind of the main structure of profit and loss statement. Now the question, okay. A basic formula to calculate depreciation would be awesome. All right, so let me try to quickly cover that, because for me, it's sitting in the category of those like accounting adjustments. So I'll take a real example. We recently, as Maru, we hired marketing consultants to help us figure out growth, like how we can position ourselves better for, wedding and events professionals. We incurred, just so I'll make up, like $12,000. So that's exactly, I think, Alina, that's exactly the question that you asked.
Mhm.
So the question was, how do we decide how we depreciate this cost over time? Again, like we didn't do that because I just took it in the month when we incurred it because it was easier for me. But if I would do that, I would think, okay, so we invested in this marketing, expenses. How long will it play out? Like how long we can actually feel or say that, all the, increased signups and then consecutive revenue of clients on Maru can actually be attributed to the work that we did as a, with those consultants. And I basically said like 12 months. I don't think beyond 12 months, because the company is changing and growing so quickly. Like you can, beyond 12 months, you can say like that this kind of, I don't know, growth that actually belongs to like the work we did like 12 months ago. So usually you either decide yourself, like what's the reasonable timeline of depreciating this expense over time, or there are some accounting tables when they have like different set of expense types and recommended timeline for the depreciation. So that's when, accounting professional can advise you better. Do payments on debt get factored into operating expenses? Well, it's a good question. From my understanding, they're always non-operating expenses because they are servicing your loans. They're servicing your debt. Like they're not sitting in a function of your business. Again, if we go in slightly deeper, there will be like on the cash flow statement, there are three components there. It's your operating activities, your financing activities, your investing activities. So you will you will factor them in your, here, basically non-operating activities, and then you will offset it in your financing activities because you're servicing your loan. That's how I would think about that. One thing I wanted to mention is, again, if we all agree, do you recommend do this analysis quarterly? To be honest, I would actually recommend do it like monthly. I understand as a business owner, you don't have time for that. And I saw the question earlier, does Maru offer this option? That's what we're building right now, guys. Like, we want to help you to make sure that this sort of analysis, well, first of all, the tagging of your income and expenses is super simple. So you can actually do this project accounting like on your phone, just like, tapping a couple of, buttons and like allocate those expenses. But in the end of the day, to show you exactly the, what's your kind of net income or, costs and revenue is on the project basis. So this is coming. And just to kind of switch, from the, profit and loss statement into the cash flow statement. So if we agree that we're running our accounting on the cash basis, so no accruals, you can take net income and consider this as how much actual cash you received or you spent. And combination of those, net income results over months will give you ultimately your cash flow statement. Sometimes you get more money, like during the peak season. Sometimes you get less during, slower season. Again, please disregard the timing in the months. It has no resemblance to the reality, but just to give like the example of how things can fluctuate within a year. And again, because I totally understand that our industry is very seasonal, it's important to apply certain cash flow strategies to support yourself. And obviously, cash reserves might sound simple and easy to kind of get. Most people are doing this forever. But for example, you can always help yourself if you're expecting like August, September, and October being slower months, and that you're actually like you have operating expenses greater than you anticipated, and you don't have enough gross profit to cover them. What you can do, you can offer early payment discounts to your clients with events like in the few months in order to help yourself at least to get to break even. In this case, like you just stay break even, you're not losing money within a month. And yes, like you basically chipping a bit of your future revenue. But given how cash flow is critical for a lot of businesses in our industry, sometimes it's it can be one of the solutions. Alternative options, and there are some companies are coming up here, are factoring. I'm sure a lot of people heard about this term. So that's ultimately that's when you're not asking your client to pay you early, but you factor your invoice. You go to the company and which offers those services, and you tell them, hey, this client owes me 10K. If you pay me now, I'm gonna give if you can pay me now 9,700, and then you collect those funds whenever the due dates are. So this way you can basically capture the cash right now in the moment by giving up some percent from your invoice in the future. But if things are critical in this month and you need to make sure that cash flow is sustained, that's one way to do that. Does Maru have options to add processing fees cost to the invoices? Yes, I'm going to talk about this in a second. Actually, it's a good question about processing fees because as we speak about the different types of expenses, so processing fees will be sitting actually here as a cost of sales because they directly impact your gross profit because that's what you send an invoice for $1,000 and Stripe will charge you $30 from that amount, so you're going to receive $970. And again, shameless plug. This is the problem, kind of like what Maru is solving for businesses, is we help businesses to pass on the processing fees onto the clients to make sure that you send an invoice for $1,000 and you actually get $1,000 in return. And the clients made the $1,030 depending on the payment method they select. But again, if you guys are interested, I'm happy to speak about this, but I don't want to make it like as a promotion of Maru. Basically, what one of the services we offer is help you improve your gross profit. And ultimately kind of all the way to the bottom line. All right. Okay, and the last strategy here is around around cash flow management, is cash flow forecasting. So this is the thing that I haven't seen too much in our industry, in the event space, but I think it's very important. Yes, and that's basically this next thing. Thanks for the question, Natalia. So on Maru, you can actually switch this toggle. So this quarter, this week, this month, and we will show you all the all the projections around your future cash flows based on the due dates of your invoices. So for example, in this case, like if you're looking in April, so your this or April, sorry, quarter, second quarter of the year. We can see that you should expect 71,000 as revenue this quarter, out of which 32 already paid, 11,000 due, and 27.5K are past due. So that's a good indication for you. Like, okay, I should have already got like 59K and I haven't. So something is wrong here. I need to like address this. And this view also helps you to kind of estimate how my next couple of quarters look like, or the year-end view. We also have what we call on-demand forecasting. So basically, if you need to have a view not like that, but like 12 months or I don't know, 9 months, like whichever view you need, we can build those reports and dashboards for you whenever you need it. Yes, so this chart basically, the main idea I wanted to share here is how can you navigate seasonality? Because I had experience working, what's called FP&A. It's a financial planning and analysis. The worst thing you can imagine is seasonality, because like it's so hard to forecast. Like you can't just basically say, okay, we're gonna grow revenue like 5% every month, and then like it's a really nice straight chart to the top right corner, which all the companies and startups like. No, you can't do that, because like our, even like with Maru right now, we're looking through, our performance on the platform, and you can see when like 2 weeks when there was Thanksgiving weekend and Christmas, there's just like drop in the performance in the entire industry. Like we just see like absolute, charts are tanking. And this, on the one hand, it's
besides chocolate.
Exactly. Well, yeah, I mean, it's every industry has some sort of like seasonality or some dynamic, but I think in our industry it's like it's very clear. I always try to see like look on the positives. Like on the one hand, we know that hey, this is gonna hit us. On the other side, it's a good knowledge. Like we can plan for that. What can you do? Like first, as I mentioned, you can use cash flow forecasts. Like, and what can you plan for is, for example, you can schedule more like corporate events during this period, because yes, weddings are less. There are less weddings, but more companies are playing or having their like New Year parties or something like that, or like I don't know, year-end parties and things like that. So you can make part of your website position for the corporate events and start like pushing, on Google Ads or something like that. Second thing is, you always need to analyze past financial performance and see the trends, because if you've been, as I mentioned earlier, like if you've been in the business for a while, it's easy. Like you can look back and you can see, okay, all right, this is why things happen. If you're new to the industry, make sure you check in with your friends and like, try to get this intelligence. Ask them like, hey, how's your year shaping up? I was told that, it's a rule of thumb, I believe, that by July, you need to make sure that all your next year is fully booked. And that hasn't been like the case this year. So this is a good moment for you like to go and check in like what is going on like with the rest of the industry or your peers in the region. Because if you're a photographer, maybe like you can check in with your fellow venue, like how do you guys looking into 2025? Maybe maybe it's not a market problem, right? Maybe something is not working on your side, like you mispriced your services, or unfortunately, as we know, like our industry is quite competitive. Somebody is like cutting the prices and like offering their services at like absolute bargain, and that's undercutting the rest of the folks in your region.
So it's a big part. Keep attending our live sessions so when we talk about marketing, how to attract more. No, I mean really, right? That's why we do all this job on your marketing, and yeah, I'm kind of promoting the other part of our live sessions, how to generate more attraction and get more eyeballs.
Fair enough.
On your
Absolutely. But I think on top of that, like knowing marketing strategies is crucial. But I feel there is not enough emphasis, at least based on my experience, around like market intel, like market reports type of thing. Because I feel like our industry is very regional. So whatever happens in New York might not be like relevant for Houston and might not be relevant for, you know, San Francisco or whatever, like Denver. It's just very different, you know, cities, different regions, different dynamic, different, you know, customs, different groups of people, like different weather ultimately. And knowing your area in details, like knowing the past performance, I think it's really good to kind of understand, because a lot of, you know, corporates, and sorry for throwing this into the conversation, but like a lot of corporates, they spend a lot on those resources just to understand what happens in the market, just because it's so big and you can't grasp it. Like even through, if you're the most networked person in your region, like you might not just have all the insights on what's going on. And the last thing about seasonality is try to align your expenses based on that. So if you know that your good months will be like summer, right? So June, July, and your plan to reinvest in, again, let's talk about something like personal, like in your home improvement or studio improvement, like don't do that in September, October. Like, you know, try to align those expenses or incur those expenses in these periods, because that's when you will feel it, like it will be less painful, especially if these investments are required. Or for example, you want to buy a better camera, right? And you know, for the next year. So try to do it also during that period of time, because here, one option, you would just say yourself, I don't have any cash, because, you know, life might get in the way. You might not, you know, be able to save enough, or some unexpected expenses will incur. Or you will just look and like 2 months in a row and like you'll be, oh my God, like I can't afford myself this camera this time. And then you ultimately, you know, limiting your own potential for the next year. So try to align your expenses and investments in the, you know, what's called like fat months. And last thing, and again, I don't want to make it as a promotion of Miro, but that's partially the problem I set, or, you know, I decided to solve for businesses, is like how we can, you know, streamline the processes and bring the efficiency through the tech. So there are, I think there are mainly two main groups of tools that I saw people using. Like there is a big marketing stack of tools and like different marketing platform systems and solutions, WebWife specifically. There are accounting systems that, you know, just help you to get a grasp on the total numbers and, well, make sure you're compliant to the government and report all your results. And then CRMs, and some CRMs or financial tools, they include cash flow forecasting. So I'm coming from a finance background and payments. So initially when I launched Maru, it was idea around like, you know, how we can build a better invoicing and payments product. So you can create invoices to your clients and make payments to your contractors, prepare all the tax forms to, you know, make sure you can report this to the government and stay compliant. But we're heading right now as a team into like more CRM-ish world, because I looked into systems like Tave and 17 Hats and Dapsato and what else, like Rock Paper Coin. They're good solutions, but I feel they're, you know, in 2024 we can do better. And that's kind of what my team is set for. You know, we really want to make sure we bring, you know, our industry into, you know, most latest tech, like bring automation, bring simplicity and ease of use, and make sure that, you know, your client's experience is also flawless and beautiful. Because I don't know, like if you're paying like 50K for your wedding, getting in, you know, an invoice that looks like payment to your Spotify subscription, just like with more zeros, might feel slightly, I don't know, different. Or yeah, I think we can do better basically.
Yeah, it's all about experience, upscale experience.
Yeah.
It
Because
starts with
that ultimately,
invoicing. Yeah.
yeah, that can set you apart as a business, and most importantly, bring this bring efficiency and you know, reduce errors, increase accuracy in your, you know, financial management. So yeah, that's kind of, you know, main content that I wanted to share. I'm very open, guys. Like if you have any questions, please reach out to me on LinkedIn. Like the link will be here, or by email. If you just want to chat like about, you know, your situation, like one thing we're launching next month, we would call it like office hours. So I'll be, you know, able to jump on, you know, with you for like 30 minutes, an hour, how much you need, like talk through your situation, like where or questions you had. That's not going to be like an accounting debrief or things like that. It's literally like, hey, I'm running my business, and like this is kind of the questions I have, like what should I do? So please reach out. Happy to help. And yeah, I would love to answer any questions.
Oh my God, I love it. So, first of all, I will jump in. Thank you so much for that extensive discussion. And I believe you brought so much light into so many like gray area of what we even at VetVibe sometimes like have not clear about. Second, I believe this is the first time and a very unique opportunity when you can reach out to the speaker, skipping us. So it's not going to be us. You can really touch the body of Alex and talk about your finance and especially talking about his extensive worldwide background in finance. There is like not every day we meet such a finance guru, right? We meet a lot of photographers, planners, and that's cool. And it's all about networking, but that is really unique, guys, to sit down with a real professional and look at your business from a different point of view, money making, money saving point of view, maybe. So please, we will, as a follow-up of this session, we will send you email and we will, I think that Alex will bless us. We will put your email and
your contact,
details, and you can reach out. And yeah, I really encourage you. And I see that we have a pretty intimate call today. So there's like, there were like around 40 people, maybe altogether there will be 100. So take this advantage because yeah, he is a very busy person. And thank you so much that it is actually exclusive for the VetVibes community. And with that, I believe we can keep things brief. And that was a great discussion during the call. And if you have like really some very important question to ask, you can do it, or you can just actually leave it for the one-on-one session.
Alex directly.
Okay, yeah. So you can, thank you very much. So you now can send all the kind words. And maybe you're still digesting what is the operational expenses. I do, because before this session, I was under impression that I know a lot about finance, but now I'm kind of questioning this. But I need to, again, digest all the information. The fun fact that out of the 15,000 revenue that you showed in the beginning, when you just put all the expenses, we end up with 2,000. This is a tricky part of the business, right? Don't be overly excited with all the money that comes your way. Look into the expenses you do. And that is like, on the one hand, it's ugly truth, but on the other hand, is how we can do the sustainable business and really thrive and secure our future, even in like highly seasonal business. Yeah, thank you so very much. And I think that with that, we can release everyone and have a great rest of your day, European friends, and Alex, you, and yeah, have a great rest of the day for those of you who are in the United States or in California, and Hawaii specifically. Thank you.
Awesome.
Thank you. Yeah, I can see so much amazing feedback. Yeah, and we even got some shine from Alex's slide. Like, thank you for bringing phenomenal speakers. Thank you, Alex. Yeah.
Awesome. Thanks all, guys.
Thank you much. And goodbye. Take care. Bye.
Bye.
Bye.